Hi guys, this is the second of a Elliott Wave tutorial. Thought I'd start this up with some music, so here it goes, let's get motivated. Alright, that'll do. So, recommending this Baltic Feet Turns from the D1 classic track. Let's give that a like. That's added to my private playlist, as you can see here. Cruising, you know how it rolls, you know how it goes down. So I'll leave the link to this in the description. Classic beat. Anyway, let's get on to the trading. So what I've done here is showing you an expanded flat. Okay, now expanded flat essentially is a corrective pattern. Okay, so as we said yesterday, we get 5 waves down, then we get 3 waves up. Yeah, 5 waves down, and then we get 3 waves up. Now, what's so interesting about this particular pattern is that you will see this all the time. Okay, there's actually 3 types of flats. There's a regular flat, there's a running flat, which in my experience is fairly rare, to be honest. It's fairly rare. An expanded flat. Now, regular flats aren't that exciting really. They're just straightforward, you know, A, B, C. So let me just draw that for you. So essentially, if we're in a downtrend, as the DXY is, I mean the dollar's absolutely fucked right now. Dollar's going a lot lower over the next couple of years. So if we just draw some lines here, so essentially if that's the downtrend coming in, yeah, that's your wave, then well, a regular flat would do this. So what does a regular flat do? A regular flat would go up like this, come down like this, then it would go up like this, and then it would resume its downtrend. Yeah, so this is the downtrend coming in. That's A, that's a B, that's a C. Now what's so fascinating about this expanded flat is, I mean, I just find it fascinating because it shakes out so many people at the same time. So here we've got the A, so right here it's just like any other flat. However, the B goes below the wave, below the end of the impulsive wave, which is here. Okay, so what happens with an expanded flat? This actually comes down to here, as it's done here, and then the C wave actually ends higher than the A wave, so you actually end up finishing like this, and it's absolutely fascinating. And the more experienced you get when it comes to Elliott wave, the more you realize these expanded flats, they're all over the place. I mean, I've seen them on multiple time frames in forex, obviously DXY, gold, silver, in the stock markets. They're absolutely everywhere, and expanded flats are just superb because they're just a little bit different to the expanded flat. Now this B doesn't have to be all the way down here, it can be just a little bit down here, and the C wave can be just a little bit up here. So what I'll do, let me just go to the S&P. Let me just find the S&P just to show you a great example of an expanded flat, which you would have which you would never have known about really. What's the S&P? Is it SPX? Yes, it's SPX, isn't it? Let me just, I mean, this is absolutely fascinating. So if you go on the monthly chart, this is the tech boom crash. Yeah, this is the property crash of 2008, and look at this. That's the trend coming in. So that's your starting point, that's your A, that's your B, that's your C. Okay, so it's expanded flat because C wave is just a little bit below the A wave right here, just a tiny bit, and this high just about gets broken I mean, we're talking minuscules here, but strictly speaking, it's pretty much a regular flat, to be honest. But strictly speaking, it's an expanded flat. So just about breaks this high, traps all the bulls, and then boom, it goes down in a C wave, and it ends up just below the bottom here, and that was the bottom there. Okay, and just out of interest um, for all you people who breathe in all this Freemasonry crap, I mean, this is not a conspiracy channel. This is not a political channel, but you know, that was the bottom 666, the mark of the beast. Okay, anyone who thinks that's a coincidence, well, fine. You think that's a coincidence. As I said, this is not a conspiracy channel. This is not a political channel. I won't have any discussions about that. But there you go. So for all those interested in conspiracies, there you go. I will keep my thoughts reserved on that topic. But let's just say there's a group of individuals who control the world. But anyway, let's not get into that. But yeah, that was your bottom, and then kicks off this bull wave, this massive bull wave. I mean, this is the final wave, I think. So this is going to end up, the S&P is going to get to 36, 34, 44,000 by 2020 something. I think the Dow Jones, from what I calculated, is going to go to 40,000 within 5 years, I reckon. So after which point you're going to see quite a hefty correction. So probably a world war or something, because let's be honest, they always like to drop bombs to justify the move in the markets. Okay, that was the tech boom crash, and then 2001 happened right here. Okay, so anyway, this is not a conspiracy channel, but it's fairly interesting how they time these wars to perfection. But anyway, that's an expanded flat. So let's get to the DXY, because I love these expanded flats. They're all over the place, and if you think about it, it works perfectly. Why? You want to take the price just enough to trap people on the bull side. So as soon as it got to here, people are thinking, okay, it's broken the new high, we're going to go to 2000 whatever. It traps all the bulls, then it goes all the way back down again, and people would have had some kind of stop order here or stops here. It triggers those stops, goes down a little bit, and then it goes back up again. So these expanded flats are all over the place, and I love them. So let's get back into our 1 month. So we don't want the 1 month, we want the 4 hourly. Yeah, okay, but where are we going? Okay, yeah, let me go on the daily. So right now in the dollar, I mean, the dollar index is going to 88. So if you want a good trade, just short the dollar. I mean, it will probably correct here, but it's no way it's going to go higher than 85, and I'll show you why. And it's going to 88 here. So after which point the dollar's going to go up massively in an ABC correction. Then it's going to come back down again, all the way down to probably 60, 50 or some 60 something. So yeah, dollars fucked in the long term. Short term it's here, medium term it's going to go up, and then long term it's going to go down. So anyway, let's show you the Fibonacci's, because this is fascinating. So once again, if you take this trend based fib extension, so what you want to do is start from the bottom of A, you want to go to the top of the A. Okay, so now this is now measuring the distance of A, and then you want to come all the way back down and project from the bottom of B. Okay, now once again, as I keep on saying to you, let me just highlight this. Okay, there is no such thing as coincidence, okay, in stock market. Okay, so no such thing as coincidence. Okay, now I mean, this is just an unbelievable short here on the dollar index. If you were in this trade, I mean, look at this. The A wave, the B wave, and the C wave is exactly to the penny 2.618 the distance of A, which is very typical of an ABC correction. Usually it can go up to 1.618, but given that this B wave was such a vast B wave down, you kind of expected it to go to the 2.618, okay, because it never goes to the 2. So if it broke the 1.618, it would not have even been an expanded flat, it would have been some sort of running flat. So that was probably one place to take profit if you were long here, and the second one right here. So that's why it's coming down. Look at this, it's coming down in an impulsive 1, 2, 3, 4, 5. So it's going to come all the way down, and it's fucked. But that's just showing you. Now if we take this let's compare the distance of B compared to A. So let's just do that. I think it's around 1.618, but let me just have a quick look. Well, it's 2. It's double the distance, so 1.618 would have been here. Yeah, so it's quite a long B wave, to be honest. I don't usually like the B waves to be this this bad, but yeah, so it's 2 times the distance of the B wave. Usually the B wave, you wouldn't want it to be more than 1.618. Here it's gone a little bit more than that, but you know, it is what it is. Okay, not all of these Fibonacci's are perfect, but this C wave is just a perfect, you know, and the C wave always breaks down in 5 waves, so it's 1, 2, 3, 4, 5 the C wave. And the reason, you know, I mean, that's obviously corrective, isn't it? So the only question is, was this move down a wave 5 or was it a wave B? And now we're getting a wave 5. And the reason why I think it's a wave B is only because you can't count this properly. I mean, this looks like, to me, this looks like an ABC in itself. This looks like an A, B, C. So that's clearly the C wave. That's clearly the C wave. 1, 2, 3, 4, 5. That's obvious. That's obviously a B wave. Now the question is, can you break this down into a 1, 2, the whole pattern in a 1, 2, 3, 4, 5? The problem is, because of this really impulsive move up here, can you do that? I mean, these two waves cross here. That's 93.31, 93.35. So that crosses. Even if that was a 1, 2, 3, 4, that's a very deep 4. That's a very deep 4. So I can't. The best count I can have for a 1, 2, 3, 4, 5 here is, I don't know, something like this, but that doesn't look right. It just doesn't look right. I mean, wave 4's crossed over wave 1. Wave 3 is definitely not the shortest. I'm not convinced by that trade. It looks very, very overlappy. Whenever something looks really overlappy, then it's probably not an impulsive wave. So look, this looks very, very overlappy. All the waves are overlapping. That's an ABC. This you may think is overlapping, but when you were to break it down, it's actually not overlapping at all, and you can quite clearly see the 5 waves. Yeah. So you just need to zoom out. And this doesn't cross here. 3 is not the shortest, and it's probably the longest. Wave 4 has retraced to about 50%. Wave 2 a little bit more deeper, which is about right. And wave 5 is roughly equal to, well, probably, yes, roughly equal to the 3, or halfway between 1 and 3, which seems about right. So, and wave 5 in itself has got 5 waves, okay, which is right. So, this to me is an expanded flat. As I said, I don't like the B wave to be more than 1.618, but these things are never 100% accurate. Occasionally you can have B waves which go up to 2 times the bottom of A. So that's an expanded flat, and I think that is absolutely fascinating. So the count on the dollar is actually this. The count on the dollar is this. It's 1, 2, and 3 actually finished here. 3, I'm convinced, did not finish here. This is now the end of 4, and then 5 is going to be at 88. So it's coming down all the way to 88, after which point you're going to get a requisite ABC correction. So expanded flats are sneaky. They're very, very sneaky, but the C waves are very profitable, only because once it's done this, and once you're convinced this is not a wave 5, I mean, even if that was a 4 and a 5, which it isn't, but even if it was, it would still make some sort of move up to make a correction. As it turned out, it only made a C wave, but it could very well make an ABC. The point is, it doesn't matter, okay? As we've said many times, it's all about the direction, isn't it? Right here, you should have gone long. Even if you counted this as a 5, which I don't think it is, you should have gone long here. So this is the great thing about Elliott. At times it can be annoying because you can have so many counts and alternatives. Am I recording this? Yeah. So many alternative counts. But at other times, all the counts generally lead to the same direction. So even if you were saying this is a 5, even if that was a 5, it would have done some sort of, I don't know, A, B, C or something. Either way, right here, sorry, that's that's not right, but you see what I mean. You see what I mean. Even if you counted this as a 5, it's going up. So, and it doesn't really matter which wave you're in, because you can just figure it out as it goes along. But you need to start making some money on the long side. Okay, so but to me it's an ABC. So that is basically an expanded flat. Okay, so essentially the wave's coming down here, that's the direction. It does an A, the B goes below the end of the impulse, i.e. this is below this, and then the C wave ends higher than the A wave, and I've showed it you on the SPX on the Nasdaq, after which point you'd get the move down. Okay, and this always chops up into a 3, 3 and 5, and that C wave is always 5 waves, and that's the impulsive leg. And they're fascinating because you can use this Fibonacci tool to just basically predict where it's going to go to. You just draw it from here to here, from the bottom of B, and then if it's not hit the 1.618, which it was never going to because B retraced so much, the next obvious stopping point is 2.618. After that it would be 4.236, which never happens. It's either going to hit the 1.618 or the 2.618. So I mean, that's not coincidence. And now it's coming down in a 5 wave to make it to make the wave 5. So you know, expanded flats are great. I could show you numerous examples. I was tracking the dollar over the last couple of weeks, so that's why I've shown it you here. And the SPX, everyone knows about that move down. And yeah, it's fascinating. I mean, these are where you can make the money. So Elliott wave alongside Fibonacci's, honestly, it's fascinating in terms of time. And even if we were to do a quick Fibonacci time on this, I mean, I've not even prepped this, but let's just have a look at time, because I find time interesting. As I said, my research is still ongoing. I hope to publish this by the end of the calendar year on Fibonacci time. Even Elliott himself said time is very difficult to predict, but I want to see if I can go one further than the great man, him and Wyckoff, the father of TA, technical analysis, in my views. So that's A, okay, and now look at this. The B wave pretty much occurred, give or take 1 day, on the 2.618 off, sorry, that's the 2.618 extension then, wouldn't it? Yeah, that would be the extension of wave B, okay? People might think that's a coincidence, fine. You can go suck it, I don't really care, but fascinating, isn't it, how this B wave is exactly 1.618 extension of the time it took for this wave here. And you know, we could also do another Fib extension to figure out the C wave. So that same extension predicts the C wave top at here. I think the top was at here, so that's 995. I mean, that was pretty much a double top, wasn't it? So that's 95 point. Sorry, I can't see the effing price. Okay, 95.15, 95.15. Okay, so it's pretty much predicted both the B wave as well as what was the high? Yeah, so it's pretty much to the penny. It's predicted the double top on the C wave, and it's also predicted the B wave. Okay, once again, none of these things are coincidences, but I just find it interesting. And let's just relate A to C now. So if we take A as, well, that was A, wasn't it? So how much longer than A is C? So C is 4.236 extension. Once again, it ends up on this level perfectly. So it's 4.236 days, isn't it? So if we just take, let's just make sure that is correct. So that took 14 days. Yeah, so that took 14 days. How long did this take? Let's take it to this second count. 14 days, so 60 divided by 14. Yes, 4.285. Yeah. So it's a Fibonacci extension. It's a Fibonacci extension. I mean, you can use the fib trend based, so you can draw right from there. Then you can draw it onto here. Yeah, so it's there, isn't it? Yeah, so it's right there again. So essentially, C is relating to the length of A. So was that 60 over 12? I think it was, whatever it was. But that's your next Fibonacci, sort of 4.236. I always forget this one. Um, by the way, if you need to figure out where your Fibonacci numbers are, you take 1.618 times by 1.618. That gets you 2.618. Then that gives you 4.24, 6.85, 11.09, 17.94, 29.03, 46. So these are all your Fibonacci extensions. You just keep on times it by 0.618, yeah? But so essentially C wave is exactly 4.236 times by this, which is a Fibonacci number. And just for the hell of it, let's just figure out what the B wave was in relation to the A wave. Yeah, that was pretty much spot on as well. 1.618. So yeah, I mean, as I've said to you guys many times, I mean, time for me, I mean, time is fascinating because everyone knows about price, but not many people know about time. So you know, I mean, this is just so fascinating because, as I've said, this is why a lot of my research is ongoing. I mean, even though I've learned a lot, as I said, you can never know enough in this game. So do you see how if you, I mean, you see how on the bottom thing you've got time, on the top time you've got price. You can predict that the dollar was going to hit this price, both to price as well as time, and that is so powerful. I mean, there is nothing left for you to do in shares other than predict the time that something's going to happen and the price that is going to happen, and that is it. That is why so much of my research is going on to this. So yeah, thank you for listening. That's Expanded Flat. I just want to quickly go into the comments. My friend, I'd like to know, can be shorted, like if it can't be shorted, quick pull downs. I mean, I short it using IG index because I'm based in the UK. So this is a derivative of the price. You're just shorting a derivative. You're not actually shorting the Bitcoin itself. Once the futures contracts come out, you will be able to short it. The quick pull downs, well, it's just basically selling and buying, isn't it? It's just supply and demand. So that's just the way it's always going to work. At certain price levels, Bitcoin's going to sell. Other prices, people are going to buy. Now, it's nowhere near as manipulated as it will be in the very near future when the futures contracts come in. And then you're going to see a whole host of manipulation. But I use IG index. So anyone in the UK, I would recommend IG. They've got an app. They're pretty good. And you can trade a derivative of the price. And a couple more comments. Blah blah blah. You know, complicated thing. Good teacher. Thank you. So yeah, thank you for this ongoing support. Certainly helps to motivate me. And let me just quickly show you what manipulation does. So silver and gold have been manipulated for the last 50 years, and look at the state of this fucking chart. And this is what manipulation does. I mean, Elliott wave still works, but you've got to have so many alternative counts. I mean, you get stupid shit like this happening where it just drops down, triggers all the shorts, then it goes back up. You get these fat fingers, as they call them. That's what manipulation does, where none of these charts make any sense. They will still follow Elliott wave, but manipulation right now compared to how it was in the days of Elliott is beyond another level. I mean, you get these stupid spike downs and you get this spike down, and if you're watching out for it, you're okay. But if you've got stops and limit orders, it can trigger them. And right now, silver, is it an ABC? Is it a triangle? Is it a 1-2-1-2? No one knows. So this is what manipulation does. You get retarded chart patterns which are very difficult to interpret. That's what I stick to gold. But yeah, that's what manipulation does. So watch out for the futures contracts. I still maintain a bullish stance on Bitcoin in the long term. It won't hit 20,000 before the new year's up, but it will be going higher, and I will be updating that once the price starts to move. I mean, Sunday is generally a low volatility day. But anyway, just to finish off, that's what an expanded flat is. So I hope you guys like that tutorial. As I've said, buy the books. The books for Elliott Wave are linked in the description below. And please like, please share, please subscribe, and I'll leave the link to this classic tune, so let's go out on this because I love this beat. Alright, I'll catch you guys on the next video.